Hi, I'm Trevor Williams with Global Atlanta. We're here with Charles Stith, former U.S. Ambassador to Tanzania and editor of a new book, For Such a Time as This, African Leadership Challenges. Ambassador Stith, what brings you to Atlanta?
Well, you hit it. I mean, it's primarily to pitch this new book, which I think offers a unique window into the recent history of the continent, and it's enough that it gives you a sense of where the continent is presently and its future potential.
What's kind of the structure of the book?
Well, it's 13 contributions by 13 former African heads of state, and they run the gamut from old lions like Kenneth Kaunda, who helped move Zambia to independence and provided safe haven for every liberation movement on the continent, to the newer generation of leadership like Navachandra Ramgoolam in Mauritius, who in the book writes about this issue of the economy and the importance of delivering the goods, as we've come to appreciate in this country around election time.
And you, obviously that's quite an achievement to be able to put all these heads of state together. Are you directing the Institute in Boston? Tell me a little bit about your role up there.
Well, when I was invited to join the faculty of Boston University, then Chancellor John Silber said, you know, what kinds of things do we need to be focused on? And I said, this period in Africa's history is as pregnant with change and possibility as any period in its recent history. There's a new generation of leader that gets that democracy is the future, free market reform is the future. And you know, I've begun to cultivate relationships with a lot of these guys while I was in Tanzania, and I thought that we could set up something in Boston that would enable us to tap into their insights and wisdom. And so the book is really one of the fruits of this effort to engage former and current African heads of state.
And it's the
African Presidential Archives and Research Center. It's a mouthful.
Right. APARC, I guess you kind of abbreviate it. Well, interestingly enough, you've been very involved in the financial sector, and that's kind of what precipitated your appointment as ambassador to Tanzania during the Clinton administration. Talk about your involvement with lower income lending and your take on the financial crisis and how that led into your appointment as ambassador.
Well, there's kind of two tracks. One, you know, the work that I did, and the other political. You know, Bill Clinton and I go back to his days as governor of Arkansas. And one of the things that I shared with him, which we had done in Boston, is we brokered the first community reinvestment agreement in the country. There was a $500 million deal with a consortium of 15 banks to do everything from providing affordable mortgages to relocating bank branches back in low and moderate income communities, particularly communities of color. And what we did served as a paradigm for other sorts of agreements that followed, and subsequently the rewriting of the regulations governing how CRA would be implemented. The committee was chaired by then Comptroller of the Currency, Gene Ludwig. I was on the committee, and we put this thing in place to deal with undercapitalized communities. And so when the president had this idea that he wanted to engage Africa in different and more substantial ways, he gave me a call and he said, look, I want you to go to Tanzania. And if you understand undercapitalized communities, you certainly would understand the struggles of undercapitalized countries.
How do you think that the current financial crisis as far as lending goes, and the possibility of a $700 billion or more bailout that they're considering in Congress as we speak, and how do you think that's going to affect U.S. policy towards Africa?
Well, let me say two things. I mean, the first is that it's tragic that this has gotten to this point because it was predictable. You know, if you give somebody a mortgage with a sweetheart teaser rate that they can barely afford, and you know in 2 to 5 years the rate's going to change, and you also know that this person's income isn't going to rise that rapidly, it's predictable that you're setting up somebody for a default. And because the whole system is incentivized to perpetuate this sort of thing. I mean, you can rightly call it fraud because it's so predictable. You know, the originators get paid on the front end when they give a mortgage.
How did it get so widespread? I'm sorry to interrupt, but I mean, it seems like this could be an isolated practice, but how did it get?
Because, I mean, my point is that it was incentivized throughout. I mean, the originators get paid on the volume that they produce. The banks get paid on the volume of these things that they're then able to bundle. You know, the folks at Fannie Mae get paid based upon the number of securities they're able to sell. And then if you're at the top of the food chain, the piece de resistance is that you get paid even if you get fired. So the fact that this thing has mushroomed to the extent that it has was predictable because that's where the financial incentives were. The tragedy of it is that it is going to make credit and access to credit more difficult for the people who need it the most. That's low and moderate income families.
Affects you, I mean, your work personally.
And then, you know, when we start to talk about Africa, you know, the one thing that the continent needs in spades is foreign direct investment. And if the credit market is tight, that has the potential of impacting the access that African countries and businesses that want to do business on the continent might have in securing the funds that they need. And then, of course, obviously, if the U.S. government is on the hook for $700 billion, that's clearly going to have some implications in terms of how our budget gets structured. And the fear and concern is that it might impact on the kind of aid that we're presently providing for Africa, which I might add, under the Bush administration, has been exemplary. He's done an excellent job in terms of engaging Africa, whether you're talking about the support for HIV/AIDS, malaria, and tuberculosis, to initiatives that are much more focused on the economic side, such as the Millennium Challenge Initiative.
That's very interesting. And you, in your book, you mentioned that there are 16 countries that in Africa that encapsulate 2/3 of the population and present opportunities. Can you kind of talk about the emerging markets in Africa in your view?
Well, you're precisely right. I mean, in the fact you lifted from the introduction. You know, 16 countries that are serious about democratization, so you've got some transparency. You know that the rules you play under today are going to probably be the same rules you're playing under tomorrow and the day after tomorrow. You know, they're serious about reforming their economies along the free market lines. So you know that there are going to be more opportunities on the ground. And then, as I said, and you noted in the book, that these 16 countries have about 650 million people. That's a pretty sizable market. I don't care what you're peddling. So there's some real opportunities on the continent, and they run the gamut, obviously, in terms of commodities, which you know, we historically looked to the continent for. But also, I mean, the opportunities in terms of tourism that are magnificent. I was just in Cape Verde in June at the request of President Perez. And he wanted my opinion in terms of the potential to do some higher end tourism. And so I visited a couple of islands, Boa Vista being one. And it's got some of the most beautiful beachfront I've ever seen. And, you know, I get around a little bit. So, you know, that's saying something. You know, the white powdered sand, sand dunes. It looks like you could be in the Alps, except that it's 85 to 90 degrees and the water is emerald blue.